TFNN. The Bull Bear Binary Option Hour. Brought to you by Nadex. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Tom and Tommy O'Brien.
Welcome, folks. We appreciate you growling and prowling with us out here. Right now, we have the Dow Industrials up 140. You get the Nasdaq up 35. S&Ps are up 16. Gold's down $1.10 at $13.31. We have silver down 5 cents, $16.56 an ounce. Light sweet crude, we're at 61.90. We're going to have crude numbers and natural gas out today.
You got it. All within the span of a half hour.
Yeah, totally. Notes and bonds, you get the 10-year note up 8 ticks. That's trying to catch a bid after 2 months. We'll see whether it can do anything. 30-year bond up 22 ticks, 143.12. You get King Dollar. King Dollar got to the top of its range, gave it up. We're down to 203, 89.710. The euro is at 123.31 to the U.S. dollar. The yen is getting strong like bull, 106.76 to the U.S. dollar. Let's go over to
I was just going to say, we got some swings from yesterday. I was just looking at this NASDAQ 100. I mean, that is amazing. Where we were yesterday, you know, at the peak to where we were in the overnight session, about 9:30 in the lows. You know, you're almost at 6,900 to 6,700 to 6,800. Pretty cool. Go for it.
It's a trader's market. And guess what? It's all about what? It's all about volatility. And each and every day, we get our man, Mr. Kevin Hinks. We get TD Ameritrade swim lessons. Don't forget, folks, 11 to 12 Eastern Standard Time. Outstanding program. You get it right on your cell phone. You go to TFNN.com or just hit Tiger TV, at Tiger TV. You can go to YouTube. Just pull up TFNN Corp. Subscribe. It's free. Going to get the program. They had an amazing program yesterday all about the VIX, the history of the VIX, how the VIX technically works. And thank God we're not in China.
I was going to make a joke myself. I said, when are they going to talk about the China VIX? Oh, wait, they're not, because it just disappeared from the market.
This is what they did in China, folks. The bottom line is that since the downdraft of the February 5th deal, they decided to stop letting the VIX say what the VIX is at.
They're not going to report the price anymore.
It's
still trading,
prices.
I think. They're just not going to report the price, because I think the government owns the agency that reports the price.
It's a beautiful
Problem
thing.
solved.
It's crazy. Kevin Hinks, what's going on?
Good morning, Tom. Good morning, Tommy.
I got to tell you, Kevin, it was a great show yesterday. Big time.
Thank you.
And you know what's so cool, folks? Okay, so picture this. You know, I've been in the market as long as that, you know, the OEX and all that. But what was really cool, too, is that you had gone through. I knew that the VIX had changed, but I didn't actually know technically how it changed through the years. Do you know what I'm saying?
Right, and it's evolved.
Yes. Yes. Right. And, you know, the explanation.
That's why we felt it was important to have Russell here from the CBOE to tell us how it's been evolved, and you know, what better way to talk about it? Who better to talk about it than someone from within the walls of the CBOE?
Yes, there's no doubt, and they made it easy, folks. That's the bottom line. Now, Kevin, I wake up this morning, right, and I should have sent you this article too. It blew my mind. You know, we started off the show. What happened, and this happens a lot in China, folks. The bottom line is that, you know, when markets go down, they call companies up and they tell them, hey, you got to stop buying your stock.
No short selling, right?
Okay,
they change the rules occasionally, yeah.
And what they did, the bottom line is that they stopped reporting the VIX the last week. They said, okay, these option guys know too much. We're not going to.
They don't want them trading the options. They're going to take away information. That way they can't do it, right?
And thank God we're in the good old USA, man. I'm telling you. That article, Kevin, was just like amazing. I don't know if you've seen it yet, but it was like,
no,
wow.
I have not.
Yeah, you'll love it. It just shows how important option traders are.
Yeah.
Yeah.
You know,
exactly.
For sure.
Oh, here we got it.
Information.
Yeah.
The information that you get from options is just it's I can't say it enough. The one thing that I miss most about the trading pit is the amount of information that I was able to derive from each option.
Yes.
be it retail or institutional trading.
Yes. No, you can see it. You really can see it because
and it just backs up with the way you're saying, Kevin, because that's what. So the state-run index compiler stopped updating the gauge Thursday. So they didn't stop trading it, right? But just like you're talking about, there's no information now. So the move is designed to curb option trading. Just like you're talking about, if you don't have the information, you can't be trading the options, and they don't want you trading the options. Though China stopped updating its homegrown version of the VIX index, taking another step to discourage speculation in equity-linked options.
It's kind of like a broker walking into a pit and saying, "Can I get a market on an option?" And the trader's going, "Well, it depends. Are you a buyer or a seller?"
Exactly.
Yeah, totally.
Exactly.
Totally.
Exactly.
It's trading places, man. They stop the machines.
Yeah. Right.
Well, here's the bigger picture, though. Well, that poses the question to me: how is it that we trust any economic data coming out of China then?
No doubt.
I think you always got to be wary.
I agree.
It's very true.
Yeah.
That throws into question everything that they emit from their country in terms of economic data.
There are different rules going on over there.
I think the easy way is don't believe it.
Well, because it's all state run.
Right.
I mean, that's what happens.
Right.
And the state isn't making money off shorts, and the market going down ever. So that's,
Right.
Yeah, I mean, when they say, "Oh, our GDP was 6.9% this quarter," I'm like, make it 69% for all I care. I'm not really following you guys.
The rules get tweaked to do it right, to make it as magnificent as possible. I agree completely.
No doubt.
You got to be able to trust the information that you're getting and be able to trade off it. If you can't, why even get it?
Exactly. So, we got another rebound. I mean, the Fed came out with the minutes yesterday. The market looked at it first. They thought it was dovish. Looked at it 20 minutes later. Figured it was hawkish. Bottom line, we get a market. We get a two-way market here.
Right. I thought the comments that came out and some of the things they said in the comments were actually, they were admitting that the economy may be running a little hotter even than their projections.
Yeah.
So that was, and then we have a Fed governor coming out this morning saying, well, he thinks 4 rate hikes for this year seems a little high.
Oh, and that's James Bullard that Kevin's talking about, folks, and he's a mover. The bottom line, the St. Louis Fed. If you want a lot of great information, the St. Louis Fed, their actual page has amazing white papers on everything.
Nice.
I mean, it's really cool what they publish out there. I don't think most people know, what's in the public domain.
Sure. Especially right now, right?
Yeah.
Where there's so much in flux in terms of rates and coming out of zero.
And what they're looking for.
We mentioned that yesterday on the show because today, from the beginning of the day till tonight, there's 4 different Fed governors speaking. 4 different Fed presidents are speaking around the world.
Yeah.
So you can deem a lot of information from what.
I was going to say, that matters, right?
It does.
Yeah, absolutely.
Yeah. That they have the leverage.
They're the decision makers, man, and what they decide really matters in the economy and almost worldwide. Yeah.
But it's so funny, guys. We came on the air here yesterday and said, "Oh, Fed minutes coming out, shouldn't be any headlines, not really going to move the market." Yeah, so much for that, huh?
No, I love that, Kevin. I love that when you said it, because I did, because that was inside the VIX program, or maybe I was leaving, and I said, "Oh, perfect, thank you, God."
Exactly, and so all of a sudden, look out.
But they
added a few key words in there that really changed kind of what their perception was of what was happening for rate hikes and inflation.
Listen, folks, right here, 45 minutes from now, great program. If you haven't test-driven the TD Ameritrade platform, come over to our website, hit the banner, bring it up. You can trade with paper money with Kevin and his team each and every day. Kevin, you have a great one, safe one. We look forward to the show in 45 minutes. Thanks so much.
Thanks, Kevin.
Stay right there, folks. Tommy and I come right back.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, accurate effective trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You know what's cool? Taking something that's good for you. Something specifically formulated to help with weight loss, better sleep, stress reduction, and the need to detox.
Nico, our hunter and gatherer ancestors found all their nutritional requirements for health in their wild environment. But today, our food sources no longer contain the vitamins, minerals, and nutrients our bodies need to stay healthy and strong.
That's why we need Primal Edge Daily Nutrition. It includes a special blend of ionic, soil-based vitamins, minerals, fatty, and amino acids in an easy-to-use liquid form.
Primal Edge is powered by highly concentrated fulvic and humic acids, nature's preferred delivery system. They have been called miracle molecules because, like sunlight, air, and water, life cannot exist without them.
That's right, Paige. They ensure we receive all the nutrition we need to be healthy and thrive. We take it every morning.
Primal Edge, formulated and approved by Nico and Paige of Living a Primal Lifestyle. Buy it today for just $89. Click on the Primal Edge banner on the front page of TFNN.com. We take your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. The Dow right now up 175, Nasdaq up 35, S&P's up 17, and the women's team, they won.
Yeah,
right?
so I know, pretty cool,
We were just
man.
watching the replays. Congratulations, big time.
It's the only unfortunate part is that it was just so late I couldn't stay up. I had the game on, and I did one of those things where I woke up and I saw it was tied with like 3 minutes left, and I was like, oh, and I tried it. The TV was on, and I tried it, and I went back to sleep.
That's too funny.
And I woke up, a pretty amazing game. The U.S. tied the game with about 6 minutes left. They were down. Then the U.S. got a penalty with like only a minute and a half left, so they had to kill a power play with a minute and a half left, where it was some dicey situations. Then they go into the shootout. After 5 shots, it ends up tied. So then they go 1 for 1, and on the 6th shot, amazing goal if anybody had seen it.
Wow.
It's
pretty
tough
cool.
to, yeah, what was her name? We're going to get her name. Jacqueline Lamoureux Davidson. I hope I'm pronouncing it correctly.
She sounds like she's Canadian or
yeah,
French.
right. So she was the one who shot the 6th. I think she might have been somewhere in the 1 through 5 too, where they go through. And she scored on the 6th shot. Canada had 1 shot to tie it, and the goalie made a great save, and so they brought home the gold. First time since '98. Pretty cool.
So cool.
Got to be. I mean, just happy for them. Everything for sure.
Big time.
So Thursday.
Yeah.
It's EIA Natural Gas Day.
Yeah, we got big
love
action.
it, man.
Right.
So let's jump into natural gas. So natural gas, I'm going to jump in. We're in the commodities. We're in the spreads.
Yeah.
Let's take a look. It's 10:20 on the dot to the second right now. So we got 10 minutes till the EIA numbers come out. I'm just going to clean up that screen. So right now you have natural gas trading at 267.5. Okay, I see it here. We're going to pull up the chart. 267.5. So it looks like we've been chopping around a little bit today from, I'm going to pull this back even a little bit more. just to get a feel where we were. So the 11 a.m. spreads are going to line up with a point of either 265 if we want to take maybe a bullish spread, maybe a bearish spread. We could take the 265, would be completely out of the money there, right? So let's just, before we jump around, I want to see where the noons line up. So noons are going to be the same exact price point.
So
okay.
They're a little bit higher than we'd like.
Yeah,
right?
I mean, when we pull up these trades, most of the time we're looking for maybe a volatility trade, right? We're buying one spread that allows bullish profits. We're selling one spread that allows bearish profits. And what's nice is that when both of those spreads line up with the floor and the ceiling being right at where we're at. So we're about 2.5 pennies away from where those floors line up. And just one more time. Yeah, so let's get a feel, though. Let's jump into the noons, okay? So that would give us an hour and a half after the news. Now, what's going to happen here is this would be our bullish spread, right, going from 265 to 285. You get 20 cents of movement. This spread, if we're buying it, you'd be risking $32, which is the 3.2 pennies that you're getting in above 265. So you'd be risking that for your profit potential up to 285. It's like a $200. So for every penny is
$10 pie. Yeah.
Right. Every penny is going to be $10 of movement in the price of the contract. So this spread has a lot of intrinsic value right now.
Yes.
Because right now you got about 28 ticks, call it $28 of intrinsic value because you're above 265. And so this, if you decided to take, and this would be your bearish spread, going from 265 to 245, this one dramatically out of the money, right? Because you got to go about almost 2.5, 3 pennies before you reach where this starts getting value, 265 down. So you're just paying premium on the negative side, which is the cheap one, B7. You're paying a lot of intrinsic value plus a little bit of premium on the positive side. So you're looking at about 38 or 3.8 pennies away from 265. Now, if you're bullish, that's not a bad trade,
no, it's not, right?
Because if you're bullish, you only have to make up this kind of, you know, the premium plus what you're paying for the bearish side to break even.
It's a penny, 1.2 pennies or something.
From where you are right now.
Yeah,
So let's just say you're looking at $38, even adding commissions, you're looking at $40. So you need 4 pennies away from 265. So you need to trade to 269 on the positive side, which is, like you said, 1.3 pennies away from where we're at for the bullish side. On the bearish side, though, right, you got to go, you still need to make up the same 4 pennies.
Yes.
And you got to go below 265. So if this jumps volatility-wise downward, you got to go all the way to 261. So this would be a nice trade if you were bullish, and you still want kind of some volatility where you're expecting a big move, you're maybe bullish, but you think, you know.
And you know what's intriguing is that, you know, we've been talking about this last couple of days, that natural gas held the low, and even with the hot temperatures in the East Coast, it's like, okay.
I was seeing all the videos yesterday on social media, man. Everybody out at Walden Pond.
Really?
Oh, yeah.
Okay,
they were out.
cool.
Our cousins are out there, T-shirts, shorts, the babies, everything. It was beautiful, man. 70 degrees in, you know, I was going to say late February. It's not even late February. It's middle of February. So let's say that you were bearish, though, right? What if you're bearish and you want to make this trade?
Yeah.
Well, the 11s and the 12s don't line up, but let's jump to the 230s, okay? So the 230s are going to line up with the point at 270.
Okay.
Okay? So 270, now these are 40-cent spreads.
Yes.
Okay, so a little bit different. And they are also longer duration because you're going until 230. But you're going to get to use 270 as the point this time. So your value is going to be in the bearish spread from 270 down to 230. You'd be selling that. This is going to be the more expensive spread this time. So that's going to cost you $31, of which about 22 pennies, $22 is intrinsic value.
And that's still 230.
That's still 230. And then on the same side, your bullish one would be the one that's completely out of the money.
Yes.
And that's going to be your cheaper one. So that's going to cost you $41 versus $38.
Yeah.
Right?
And
this has a more bullish...
bearish.
Bearish, thank you.
Yes.
More bearish one because all of your intrinsic value is in the spread.
And you got a long period of time.
Yeah, and the 230 is nice. It is because, you know, market doesn't stop trading at noon, right? So sometimes it's, especially if you're not paying a lot for that extra premium for the 2.5 hours, which it doesn't seem like you are.
The difference here would be that you have to be bearish versus bullish.
I agree, right. Because to put it, so we got about 4 pennies, let's call it, give or take. You need the 4 pennies this time from 270. So to the downside, you're looking at 266. Again, we're pretty close to that, but on the upside, you need 274 to break even. So there's the demonstration.
Cool. So let's see what we got here. And this natural gas trade, folks, has been wild. There's no doubt. So 264. Oh, look at that.
And let me just make sure. I just want to make sure we're on the same.
Yeah, so this is the March contract.
So, yeah, the one we're looking at here is April.
Okay.
So just to be aware.
That's good. That's good to know.
Yeah.
Okay, so let's see. NG, let me get this April contract right. It's natural gas active contract. Well,
that might not.
No, they're doing that. Okay.
So NG.
What,
I know, right?
1 second. Natural gas.
They're all going to move in.
Yeah, I'll just put it up there.
They're all going to move together. That just explains the slight price difference from where they are.
Okay, so. Okay, so. Yeah, you know.
A little bit of a tight range we got.
Yeah, and then I like the deal.
Yesterday, look at that.
Right.
You're talking about 12 pennies a movement. I mean, just remarkable.
I actually like the deal on the upside here.
So you'd be a little bit bullish.
Yeah, I would.
Okay.
I would.
So,
yeah.
So taking.
So that goes to the noons, right?
Taking a little bit of a bullish bias.
Yeah.
Yep. Let's go back to. Now, the 11's lined up as well.
Okay.
With that same, okay? We just jumped to the 12s.
That's right. That's right.
Just to give it, you know, if you want, you have many options, but let's just go back into the 12s. So that would be our bullish spread there.
Yeah.
You're buying one. Our bearish spread here. Selling one. So yeah, we're looking at about 41, call it 4 pennies away from 265. We'll be right back with those numbers in 3 minutes, folks.
Stay right there, folks. Come right back. Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get them, folks.
It's a special month at TFNN, and with market volatility back, we've decided to hold an open house in our Tiger's Den. For this month only, you can get a full 30 days of Tiger's Den membership without paying anything. The Tiger's Den is our interactive chat room where you can chat with other tigers and tigresses along with the TFNN hosts during each of their programs. For all of the details and to start your 30-day free trial to the Tiger's Den today, visit the front page of TFNN.com before this deal is gone.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Welcome back, folks. We got, how much did we fall? 124?
124 was the decline. The median estimate was about a decline of 122, and so pretty close to in line. And from there, we're getting a little bit of a boost right now. Looking at the contract, we're trading up about a penny. We're trading about 267.7, call it. And we're up at about 268.7. Now, if we had made any of those trades for the noon, when we're a little bullish, again, about 269 was going to become
break even, right?
Our break even. So this would be our bullish spread from 265 to 285. And again, you can trade out of them if you want. You can see right here, so we're approaching 36, 34. We're almost at break even. And again, you know, we didn't need to go far to be at break even.
Right.
That's why, you know, getting even one penny
bias
of movement is going to kind of get you into break even. And with that, you know, a turnaround for sure. So let's just pull up these numbers real quick. So stockpiles declined 124 BCFs. Median estimate was 122. Analyst forecast ranged anywhere from a decline of 131 to 116. And inventories, that's interesting, 412 BCFs below the 5-year average. Now, most of that's already calculated in, but still pretty remarkable that inventories are that far below where they have been, and that the price is so low with inventories so low.
Right. Now they get the ranges. Oh, look at this range. This is interesting.
Weekly change of inventories by region. East was minus 29 to 403 positive. Midwest minus 40 to 428. Mountain was minus 11 to positive 111. Pacific minus 9 to positive 204. And South Central minus 35 to positive 614.
And when you look at those numbers, remember we were talking about yesterday? The story yesterday, folks, was the Midwest and the mountain region, they got so cold that the wholesale prices went up dramatically. You can see it there.
Yes.
And then the East Coast, of course, they crashed.
Yeah.
And it's right there.
It's remarkable how the compartmentalization of natural gas in terms of just not having the same type of availability throughout the country.
I know.
In terms of pipelines and all that stuff. So you really do see segmented markets in the pricing of natural gas across the country.
And if you ever could figure out, and I guess, you know, the tankers now are doing
they're trying to figure it out, right?
Of going overseas.
Right.
Overseas, I don't know what it is today, but overseas normally it's $12, and we're talking free.
And we saw the stories about tankers sitting outside of Boston, right?
Yeah. Oh, yes. Bringing it in.
Same deal.
Bringing it in.
Totally.
Pretty amazing.
So we'll check back in on it, but up about a penny from where that news broke, and pretty much in line with the estimate in terms of 124 versus about 122.
Yeah.
Yeah.
And, hey, we're going to go to Bitcoin. I got my Bitcoin happening.
Yeah, Bitcoin.
My half of Bitcoin.
Struggling a little this week, you know, which is nice for you, sure.
Yeah. So, you know, and if you want to see some volatility, watch this last night, folks. This was a trip last night. So, look at this. So, you know, when we close markets here, you know, that's what we're 10,242. The thing went all the way up to 10,900.
Man.
And then, you know, came barreling down. You know, we've hit a low of 97.73. So that trade there, you know, if you're trading on the Nadex exchange, folks, you got to remember that on the weeklies, that will close. They will close at 3 p.m. tomorrow afternoon. It's not. I don't have to keep that till that. You know, you can trade it anytime you want, but that you want to be cognizant of the time frame.
Oh, definitely, definitely.
No.
Yeah. So you got about 30 hours left until expiration.
Right.
Yeah, not bad. And that started off at was it like 11.5 about.
I got in, I think, at 11.5.
Yeah,
I sold at 11.5, 11.4, 11.6, somewhere around.
It was because it was pretty much at the beginning of the week, and the beginning of the week was at 11.5 because that's the square middle of the spread, 10,000 spread, 5,000 on each way, 11.5, and I remember that you were getting in pretty much at market, pretty much right at middle of the spread, no premium on either side. And what's remarkable still is
I know it's
you know, and this is where there's a lot of exposure still. So there's not a ton of premium because, you know, even if you're buying it, right, you're buying it at, let's say, 10.8, you're risking, which is cool here. That's what, you know, you're risking 358, which is $3,580 to the downside of Bitcoin pricing.
Right.
And even let's just jump it up to 10 because that makes it so easy when you go dollar for dollar.
Right.
So you're buying it at 10,080 and your risk is down to 6,500. So you got 10 of them, which is dollar for dollar on Bitcoin. But you got profit potential all the way up to 16.5. So you have defined losses of 3,500 and defined profits of 6,500. and you're getting in within $35 of the price.
Right.
Which
Now,
is
you flip
cool.
it around the other way. Watch this. You flip it around the other way, you're getting in with $8 of the price, or $10. This is pretty wild.
$6,500.
Yeah, but I just mean, you're selling
right,
it. Yeah.
Right, for sure. And the reason why is because you're selling it here. They're actually giving you're selling it $10 above the price.
Right.
But you're almost in a 2-to-1.
Yes, you're risking $6,400 to make $35, and you'd only do that if it went to $6,500, by the way.
Yes.
And what does happen, just so you can understand, that's why we'd like you to do this on a demo account first. The bottom of the spread and the top of the spread are important to keep your head wrapped around, because that is all that matters. If it goes above 16.5, you're not going to get anything. It goes below 65, you're not going to get anything.
Define profits, define losses, no matter what side you're taking. Right. You got a floor, you got a ceiling, and then the market bid offer prices itself according to where you are in the middle of that spread.
Right. Now let's see. Yesterday when I pulled this up,
you can just minimize that.
Yeah, the amount of trading has accelerated dramatically at the CBOE and the CME.
Okay.
Oh, not today though. Look at that. Interesting. So yesterday, when we pulled this up, this was big numbers yesterday.
Okay.
So today you only got 3,700 on both of them, really. 3,500,
sure,
2,700 coins.
Yeah.
So, what's intriguing about that is like, okay, and it was an easier trade, I think, just anyone technically when it was going up to the top of the swing.
Sure.
It's like, okay, let's give it a shot here.
And it's still such a tiny market in terms of, only 7,000 Bitcoins traded in there.
Yeah.
You're trading half a Bitcoin right now.
Right.
There's only 14,000 of those in existence. In terms of like, if you're half, that's 7,000. Well, there could be 14,000 of you trading it. The market's so much bigger especially when you talk about,
Oh. Listen,
financial companies, trading desks.
Oh yeah, and what I think what will happen though is that as that was the first time that I traded it at all. As traders get used to it, they'll get more volume. I mean, that's you know what I mean. It's like, okay, I want to see how this works first, before I dive in.
Yeah, and we got a two-way market going, like you're saying. So big action yesterday.
We do.
Yeah,
we do.
Yeah.
Let's go over and take a look at that dollar. So the dollar, folks, got up to it got close to its swing, and it looks like it wants to give it up. So we take a look at this range that the dollar's been in. It's have a hard time doing any type of counter trend bounces. The last counter trend bounce got up to 94.55. We got to only 170. Interesting, man. It felt like it was getting bigger than that. No, 91.70, and it's pulling back down. So it's going to be that 90.020, which would be the 14th.
Okay.
That's kind of your benchmark because they had good volume there. We came down with 39,000. You're going against that with 17 right now, so that's saying we'll probably do like 26,000 today. That's not enough. If it gives it up on price, then that would be game. That would be game that's going to go after this low again. And if we go over to the gold contract, you'll see the gold has rejected lower price. That gold got down to 13.22. We're at 13.31. As soon as we get back, we'll talk about the yen, because it looks to me like the yen's getting much stronger, and that's what's going to put the juice inside these metals again.
Okay.
Stay right there, folks. Tommy and I come right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. We have the Dow Industrials right now up 230. You get the Nasdaq up 20. S&Ps are up 45. Percentage-wise, what we have out here is that you have the Dow up 0.8%, S&Ps up 0.6, Nasdaq up 0.6. Let's go over to those futures and see how close we're getting to those highs out here from yesterday.
Got to be close.
We're getting, yeah, well,
not quite, I guess.
Well,
it's quite a turnaround
we went so far down, I know.
Yeah.
You know, so
after being so far up.
Yes.
Right.
The futures yesterday got to 27.47. You're at 27.18, but
we're a full percentage away.
Yeah, I suspect we're going to try to get up there though.
Yeah.
Now, let's go to oil too.
Sure.
I mean, this is a double banger out here today,
Definitely.
folks. You get because of the holiday, we have natural gas and oil. So.
And just out of curiosity, I want to see your natural gas. So natural gas kind of right back to where we were before the news.
Oh, interesting.
267.5,
right.
just out of curiosity. So we're going to jump into crude oil. Crude oil numbers coming out at 11 o'clock, EIAs. So the 11 o'clocks don't work for this one, right? Just to be super clear on what you're doing. So let's start off with the 12s. Right now we're trading 61.75, let's call it. Okay.
Yep.
So on the 12 o'clocks, we really don't have ones that line up super close to that. We're going to have a 61.25 if we want it, or we're going to have a 62, depending on if you'd be bullish or bearish, right? So 62 is only about a quarter away from there. Let's start with that one.
Okay.
So 62 to 63.50 on the bullish side, 62 down to 60.50 on the bearish side. Bearish side, the one going to be having the value this time, because we're going from 62 to 60.50.
Right.
We're about 28 cents below there. Now, that's expensive because you're paying almost 30 cents of intrinsic value.
Yep.
Plus a good 13 pennies of premium with the knowledge, that the market makers know that there's inventory numbers coming. They know there could be a pop. And then you'd be buying this one. So what's similar here is you have $14 of premium on the one that's completely out of the money. You have a similar amount of premium in this one as well. It's just that you add the intrinsic value.
Right.
That's where, but you can see that add them together, you're paying about $57, $58. You need about 58 cents away from 62, and that gets a little pricey, especially on the bullish side, because you got to move a good 75, 80 cents just to break even on the bearish side. You got to move a good 20 cents in your direction.
Yes.
So out of curiosity, let's jump over to the 230s. So 230s line up with 61.50. So these are what's interesting is you got $3 too. So let's just see how these price out. So this is going to be a little different. You're going to have the value to the upside, right? You're going to have about 13 pennies to the upside.
Okay.
There's your
bullish.
There's your bullish.
Yeah.
Here's going to be your bearish. So you're looking at $63. Now, these are going to be more expensive because till 2:30, oil can really rock all day. Yeah. And you have not only just till 2:30, you have $3 of profit potential on each side, as opposed to $1.50 on each side. But still, not. You know, if you're expecting big numbers, if you're expecting big volatility, let's just pull up the chart and see where.
And those EI, I forget what the EIA was last night. There was
the API. Tuesday,
yeah.
Okay. But, you know, it's as in, we've had some movement in oil, you know, even since, I mean, check this out. Since 9 o'clock this morning, we spiked up 50 cents, pulled back 50 cents, let alone the overnight session. We were down about 61, trade up a full $1, pull back 35 cents. So that's some good movement ahead of the news, for sure.
No doubt.
Yeah.
Okay. Well, and now that number there, folks, will be out right at 11. So as the swim lessons is coming on, that baby's going to be coming out. We go over into, okay, so notes and bonds are staying the same. Gold is basically trying to catch a bid. Let's go to that silver market for a second. Let's see what we got with silver. So silver right now, down 0.2%. Okay, this is pretty good. This is going to be a rejection at lower price also. So, you know, we're getting the rejections at lower price. Now we need the bids. That's, you know, we need the wide price spread, accelerated volume. If we go over to the yen, that's what we're going to talk about.
Okay,
so,
yes.
The yen, folks, this is getting strong like bull. And this has been quite a move. You know, we just went from, yesterday it was at 107.90 to $1 US.
And when it declines in price, it's gaining strength, correct?
Yeah. So we went from 107.90 to $1 US to 106.48 to $1 US. And normally what ends up happening is that when this gets stronger, gold gets stronger, and the Nikkei gets weaker. So let's go see what the Nikkei did last night also. Yeah, the Nikkei is down $234. The Nikkei cannot stand it when the that market gets strong.
Sure.
Hey, you know, we were talking a little bit earlier about China. Want to see how they twist arms in China?
Sure.
You're going to crack up. This is just amazing, folks. I was looking at this morning. All of Asia is down except China.
Not bad, right?
They're up 2%. Now watch this. And if you Google this, folks, Tommy and I were talking about the VIX, but what they also did, meaning the government, they were calling companies up, telling them they better stop buying back some of their stock.
Okay.
Telling the big players.
And what's interesting is they can't control everything, right? They can try, because that's quite a cascade from 3,600 to 3,100.
Exactly. Right.
That's a good, I mean, 500 points in a 3,600-point index. 15%.
Right.
But when you're fighting the government as a headwind that's trying to tweak things, that's just something you got to be aware of.
And what I don't know yet is that, you know, in their downdraft, you can see that this market is nothing like ours, meaning it's never come back like that. You know, our market is way up past the highs. Their highs of 2007 is double the price where we are right now.
And even going back to 2015, it's almost, well, it's a good 1.5 times where we're at right now.
And what happened in the depression there of 2007, I'm not sure whether the government ever let them get out of the equities they were in.
Okay.
Meaning the big players, not the you and me. Do you know what I mean? Sure. But what they had done, they had pressed the larger players. Now, that being said, what ends up happening in China also is that they pressure, and then all of a sudden they're saying, well, up the street, there's some more banks if you want to go get some more money.
Sure.
You know what I mean? So it's kind of a, you know,
they provide the liquidity.
They provide the liquidity.
There.
Okay, now go get into something else. Go buy some other stuff for us. You know what I mean? So, you know, it's a different way of growing a country.
Definitely.
You know, there's no doubt about that.
And as we speak, market's just climbing higher. 241 on the Dow. S&P's rocking and rolling, man.
Yeah, let's go take a look at it. So what you're going to be looking at out here today is that is this expansion in price again going to be on anemic volume? Because if that's what you got, this thing is setting up again for a test of the February 5th. You know, we're coming into the end of the month. It's window dressing.
Sure.
It's like, to me, this thing is setting up that you know, you're going to get 3 tests of this February 5th downdraft, and, you know, you got to kind of set up the perimeter as to after the fund buying at the end of the month and the IRA buying at the, you know, first, because we're pretty close to it. I mean, the S&P cash is at 27.16 and it's 27.63. You know, that's the exact number.
Yeah.
Now we hit last week 27.54, so actually it was 10 points away from it. Actually.
Yeah.
Pretty wild. Stay right there, folks. Tommy and I are coming right back, and of course, then we're going to go to swim lessons. I'm Mr. Basil Chapman, Steve Rhodes, Dave White. I'll be back. Andy will be back. Tommy and I are coming right back. Dow right now up 256. Nasdaq up 52. S&P's up 25. Come right back.
Are China A-shares hot or not? If you trade China A-shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A-share Bull and Bear ETFs. China A-shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
You don't buy into that nonsense, do you? You know you can't time the markets. I didn't. And in 2006, I set out on a mission to do just that. I began by surrounding myself with the greats like Tom O'Brien, Larry Pesavento, David White, and Basil Chapman. I read countless books and even looked to the moon and planets for answers. Now, we both know that trading is 80% mental. So I learned the exact tools that Tony Robbins uses to overcome fear. I'm Steve Rhodes, author of Mastering Probability. And last March, the folks at Timers Digest began tracking my newsletter signals, which through January 18, 2018, placed me as the #1 gold timer for that exact time frame. Now, I can't officially be recognized until Timers Digest has a full year of signals, but clearly I've learned how to time the markets, and I'd like to teach you how to do that as well. Subscribers to Mastering Probability gain access to my live and archive workshops where I show you the exact same patterns that earn me this #1 ranking. If you're looking for great market calls and an education, sign up for Mastering Probability today at TFNN.com.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Thinkorswim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors. Learn how to trade options with swim lessons. Brought to you by TD Ameritrade Thinkorswim. Next on TFNN.
Welcome back, folks. Dow right now is up 232. You get the Nasdaq up 47. S&Ps are up 21. Let's go back and check gas before we... Oh, look at that.
Yeah, so it looks dramatic, but that's only because this is such a tight trading range that we've been in for most of the morning. Yeah, I mean, realistically, where were we? Yeah, we were right here coming in. What are these? Are these 3-minute charts? They might be. Yeah, they are 3 minutes. Okay, let's put it on a 5-minute. That puts it a little bit. I mean, we're pretty close. We're about a half a penny away from where we were when the news broke, and I'm just trying to peg it right on the dot. Yeah, so here's the 1025 bar. This bar ends when the news breaks, and so we're within. It was 267.8, within about half a penny, and nothing too surprising on the news really in terms of 124 versus 122, and kind of just hanging steady. And then let's just check back in on crude one time as we wait for those numbers at 11 o'clock.
Yeah, it's going to be coming right up.
Crude 61.62, same thing.
Some action.
It's pulling back a bit. We took a look at this at the 1050, kind of 1045, so kind of right where we were, 61.43. We'll see.
Pretty cool.
Pretty
cool.
And
if we go over to the King Amazon for a second before we close up this hour, and we go, look at this, 6 more cashless stores. Where are they opening them?
And I saw, was that, did they make another high yesterday? Or is that the high
did. They tested the high yesterday.
1502 is above the 1498 as well.
And this is so cool. So the 1502, that was the high of yesterday, too. They trade. Yeah, 1503.49.
Okay.
And it failed yesterday.
Okay.
It closed. The benchmark would be 1498.
So 6 more cashless stores.
Yeah.
Everything's cashless. Uber Eats, man, the whole deal.
Pretty wild.
It is.
Stay right there, folks. We got swim lessons coming up for you. Basil Chapman, Steve Rhodes, Dave White. I'll be back this afternoon. Andy Heck. Thanks, pal.
Thanks, man.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.